Let's get a look at the big picture. Ted Thatcher is with us, President, Bright Lake Wealth Management. Ted, good to see you. Folks are calling today the Trump trade. Do you think that's an appropriate name for today's action with the up arrows that we're seeing? It's certainly a risk-on day, so much so that Bitcoin is up nearly 10%. I mean, that means risk-on to folks. That would be an indicator. What did you think about today's reaction in the market?
You know, Nicole, it's always good to be with you. And I do think a lot about today in reflection of what happened over the weekend. I think, of course, the former president dodged an assassination bullet. And in many ways, I think that the financial markets did as well. Obviously, the correlation, the financial markets to an assassination attempt is a difficult one. But at the end of the day, we've been dealing with reasonably fragile financial markets with a tremendous amount of sensitivity on interest rates from the Fed and inflation. And so we can talk about the broader consequences that we've seen in the marketplace with what happened last October with the terror attacks in Israel, and certainly the war in Ukraine and the effects that has had. And so coming into this week, I think we're all quite grateful that the markets are not also having to swallow a, confirmed assassination attempt, and it was only, while that bullet was ultimately dodged very gratefully.
So I appreciate the response and the thoughts on the terror attack and a market that's running up. But is there a correlation between how this market is trading and what may or may not happen in the elections?
Sure. I think that a lot of times when the markets are forward looking, it's trying to digest what it assumes. And at the end of the day, typically going into an election season, there is uncertainty because of the potential change in policy, both from a financial policy standpoint, certainly domestic and international policy, and just regulatory risk as it is often described as. And so, because at least where I'm seeing the polls at, I think that the market's assuming a little bit more in Trump's favor right now, and obviously coming away from what happened over the weekend, the amount of political capital he holds seems to be quite substantial. I imagine that we might be assuming the markets here are that we're going to be getting some of those a little bit more conservative financial policies potentially come November. Obviously, we're so far away from that. And I might just say I don't always fancy myself a political commentator. Certainly, I try to be much more on the financial side. But on a day like today, I think it is hard to ignore. And I agree with you.
Right. Well, it's not about agreeing with me. It's just that that's what I read. And, that there is some optimism that maybe there'll be some more, maybe it could be a more business-friendly administration, things like that. That being said, when you look at the big picture, does anything feel different? Do you feel like the next few weeks are crucial, or is it more the summer doldrums?
I do think that when I look at the big picture, at the end of the day, once we hit July 4th until, the usually that mid to August timeframe, things are just a little bit slower. You can look at the trading volume, it typically comes down. And so outside of really big news, we don't see usually massive, changes in the market. And so typically what I will kind of sit back and look at is say, okay, if we have, not a ton of major market movers occurring outside of single stocks, releasing earnings and things like that, how might we position things going forward? And so I think if we do take a look at that big picture, I start to think about what might be coming down the pipe. Obviously, Jerome Powell has kind of hinted at now that we're facing not only inflation as a risk, hinting, of course, at some cooling jobs numbers that have come out. And so in a lowering interest rate environment, I think that I start to say, okay, let's look at small cap stocks here. As we know, these S&P's returns this year have been driven almost entirely by big tech. We could talk about the names NVIDIA, Apple, Microsoft, Google, of course. But at the end of the day, if we are going to see, I think, the second half of this year be as great of a returner in the S&P, it's hard for me to think that that will all come from, big technology. And in a lowering interest rate environment, I think that those smaller companies, the other, 493 members of the S&P 500, getting a little bit of a tailwind, presuming we do get those rate cuts later this year.
Right, right. So a lower rate environment. You do like small caps for that. That being said, I mean to try and mimic with the S&P up nearly 20% this year. Very
Sure.
hard to say we'll do the same for the back half of the year. But for the drivers, it's been tech. And so the question would become, what else could drive this? I mean, you'll look to the other 493 companies, I guess, or is it
Sure.
going to be tech again? You know, what do you tell folks to put? Where should they put their money to work so they can make some money in the second half?
Absolutely. Well, I do think, again, if I come back to the tailwinds we might see when it comes to interest rates, I do like those small and mid cap companies. But at the end of the day, as you noted very well, and as the numbers tell us, big tech has been a huge driver of returns. And so I think a lot of us would still come back to that phrase we've heard many times, which is let your winners ride. It does drive really good returns. And so ultimately, when we have a huge push up in the markets like this, I always say it's reasonable to take a little bit of profits, take some of that risk off the table. So if you were holding Nvidia and it's shot up for you, it might be a good opportunity to take some of that risk off the table. Not sell the holding entirely, but maybe just, collect some of those profits. It's harder for me though when I see a company rise like Nvidia has to, suggest a levering up on that position. I could see a scenario where Nvidia explodes further from here. But I think if we're being a little bit reasonable here, we could also see a scenario where it might draw back a little bit as well.
Understood. And any thoughts on investing in short-term bonds or anything like that quickly?
Sure. At the end of the day, if we hold some cash right now, get those short-term bonds still paying us well over 5%, I have no issue with that. If you're trying to say, hey, I'm going to take some risk off the table, I like the idea of parking it in something like that, certainly.
Yeah, it's good to see you, Ted. Thank you so much. Ted Thatcher, Bright Lake Wealth Management. Ted, thanks.